Year to everyone. As I promised, I love to, I love to see everyone more often, see everyone more often in the live streaming itself. So I think before I start anything, am I very laggy or am I very jammy? Am I stucking a lot itself? Please let me know. Please let me know if my connection is good. Is it okay? Please let me know before I start. The things that I wanted to share today, which is quite important, quite dry and quite laggy. Good, right? All right. So now, so if I'm okay, I will start my part of the the live streaming itself. Pardon me for being stammering. So I just on my live streaming. I mean my AI translation. See, it's such a hectic day that testing 1 2 3 1 2 3. Yes. Okay, so if everything's good, then I will probably continue the things that I want to say. First of all, guys, I think first of all, number one things, Happy New Year to everyone. And then secondly, a lot of things have happened along the new year. Number one thing is that congratulations to our UNX token is now officially listed in UniMex exchange. And you know that once it listed, it actually move up about 25 to 30%. The price actually move up 25 to 30%. So it is a marvelous achievement for UNX token itself. So secondly, of course, another thing that major things that happen is our staking reward has reduced by 30%. So for old user, for previous user or our old timer is like your in terms of dollar wise, in terms of money wise, it hasn't changed so much. Okay, because we reduce the staking reward for 30%, but the price of the UNX token has increased by 30%. Okay, has increased by 30%. So in terms of dollar wise, for the for all the old timer, right, for all the old user, nothing much has changed. Okay, nothing much has changed. So so this is a major milestone. So and this is also part of the white paper. It's part of the the dropping or the the decreasing of the staking reward is also part of the white paper. Part of the things that's written inside the white paper. Sorry. Okay, part of the things that is written inside the white paper, which I am going to go through with everyone today. It's gonna be a very dry. I try to make it as interesting as possible. I try to make it as clear as possible, because I know the white paper is already published out. I believe everyone has seen the white paper, and I believe a lot of people still not very sure about our how this white paper works. So today I will be the one. I won't say I will be the one. Today I will try to use as layman as possible, using as much layman term as possible to to explain the white paper in details. I think the most important parts, there is I think there's about 13 parts itself. Point 1 to point 8 is one of the most important one. From point 9 onward is rather straightforward and direct. So without further ado, let me just flip my camera around so that you can actually see what is the white paper. All right. So guys, and then I flip the mirror effect. So is it okay, or am I in mirror effect? Is it okay? Please let me know. Okay, please let me know. Is the camera okay? Is the camera okay? Let me ask my colleague. Okay, okay, okay. It's okay. It's okay. All right. Let me just confirm again. Okay, so it's okay, right? Okay, if it's okay, then I will continue, with my, oh shit, I will continue with my white paper presentation itself. Okay, so let me just lower the camera a bit. Okay, so UNX white paper one version 1.0 itself. So as I mentioned, there is 13 parts, but from point 1 to 8, nope, there's 13 points, but from point 1 to 8 is one of the most important. Okay, one of the most important things that I want to go through with everyone itself. Okay, so bear with me. I try to make it as interesting as possible, and then while explaining the white paper to everyone in the live streaming itself. So, of course, point number 1, introduction and vision. Okay, UNX is a layer 1 public blockchain developed as part of a UniMex ecosystem. Okay, designed to serve as a secure, sustainable, solvency-aware financial infrastructure. Okay, so UNX chain is not optimized solely for throughout or fixed supply narrative, but is built on the principle that long-term network security must be continuously funded, verifiable, and constrained by protocol level rules. UniMex acts as an early ecosystem initiator, application builder, while UniMex, UNX chain operate as an independent public blockchain governed by the protocol rules and on-chain mechanism. Okay, the UNX protocol introduced BFT finality, a security budget driven issuance model, and a native solvency verification mechanism to support long-term financial grade application. Blah 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 blah. Okay, so what does that mean? Okay, so let me just break down for you. Okay, so this is to let people know that UNX change is a specialized blockchain infrastructure, while many blockchain focus on speed, okay, or being digital gold, okay, like a fixed supply like Bitcoin. But UNX change focus on financial stability and long-term security. Okay, and long-term security. So here's the breakdown of the core concept. The relationship, okay, between UniMex and UNX chain. Okay, so if you think of UniMex as the founding company or the first developer, they started the project and built the first application. However, UNX chain is the actual highway, the actual highway is what we call the layer 1 blockchain itself. So it is independent, meaning it's run on its own code and rule, not just by the UniMex team itself. Okay, so this is roughly what the first part, the introduction and vision, is all about. So secondly, as is mentioned that the UNX protocol introduced BFT finality. So BFT finality is a technical standard that ensure once a transaction is confirmed, it is permanent and cannot be reserved. Okay, even if some part of the network act maliciously, which have bad intention, so it cannot be reversed anymore. So for solvency verification, okay, this is a very unique. Okay, this is very unique. Okay, it implies that the blockchain has built-in tools to check if financial application, okay, like lending protocol, actually have the fund they claim to have, reducing the risk of bank runs or collapse itself. So bottom line, okay, in summary, what does the first part say? UNX chain is positioned itself as a conservative and honest blockchain for serious finance, prioritizing a sustainable way to pay for network security over speculative tokenomics. Okay, so this is our, this is the, this is the, what the point number one is talking about, the introduction and vision itself. Okay, so the second part is our network overview. So network overview is that, from here you can see that UNX is a modular layer 1 public blockchain characterized by proof of stake consensus with BFT finality, deterministic and irreversible state finalization, security budget driven issuance, native proof of reserve and proof of liability, modular architect optimized for financial infrastructure. So for first part, okay, what do I mean? So proof of stake, okay, instead of using proof of work like Bitcoin, okay, the network is secured by user staking their UNX token itself. Okay, so as I mentioned just now, okay, for BFT finality and Byzantine fault tolerance, right, it means that, okay, as long as, okay, the system is designed to reach a consensus, even if up to 1/3 of the participant is offline or trying to lie or do malicious. Okay, so BFT finality ensure the network stay honest and functional. So this is what the first point, okay, is all about. So deterministic and irreversible state finalization. Now what does that mean? In some blockchain like Bitcoin, a transaction is probably final after a few minutes, but there is a tiny mathematical chance it could be reversed. Sorry. Okay. So deterministic, okay, means that as soon as a block is added, it is 100% final. It is 100% final. There is no waiting for confirmation. Once it's on the ledger, it can never be changed or undone. This is very vital for high stake finance, where you need to know exactly where the money is at all time. All right. So this is deterministic, okay, and irreversible state finalization. Now, for security budget driven issuance, most blockchain have a preset schedule for releasing token. UNX is very different. Okay, so UNX is very different. I'm talking about the security budget driven issuance. Okay, so for UNX, it calculates exactly how much it costs to keep the network safe from attacker, and then it will adjust the creation of new token to meet the security budget. It's safety first economic model, prioritizing a secure network over a fixed supply narrative. So this is what, okay, the security budget driven issuance means. For those people who who really wanted to take note, I try to speak as slow as possible. Okay. And then for native proof of reserve and proof of liability, POR and POL. Okay, this is one of the most unique feature UNX Change have. It built on honesty check directly into the blockchain code. Now, proof of reserve, it proves the asset. Okay, proof of reserve means that it proves the asset actually exists. Okay, it proves the asset actually exists. Okay, and proof of liability means that it proves exactly how much it owes to the user. Okay, so why is it metal? Why does POR and POL important? Okay, because by having native, okay, or what we call the built-in, okay, what I mean that by having this POL and POR built-in into UNX chain, UNX can automatically verify if a financial app is solvent or not. it prevents the kind of hidden debt issue that caused the collapse of platform like FTX and Celsius. If you are familiar with FTX, saga, this is exactly what happened to it, because they do not have POR and POL. So for UNX change, we have POR and POL. Okay, so with this built-in app, we can automatically verify if the app is solvent, prevent hidden debt that cause platform to collapse. Okay, so this is what we call the proof of reserve and proof of liability. So for modular architecture, optimizing for financial infrastructure, what does it mean? So modular means the blockchain is built like a, for example, like a Lego bricks. Instead of one single program doing everything, right, different layer handle different tasks. Okay, like execution, data, settlement, etc., etc., etc. Okay, now this means that the network, okay, this make the network easier to upgrade and allow it to handle complex financial tools without slowing down or become too expensive. So modular architecture optimized, this is very important. Why? Because anything, including your handphone, your tablets, your computer, need to upgrade. So this thing will make the upgrading easier and less expensive. Okay, so this is what we call the modular architecture for financial infrastructure itself. Okay, so of course, okay, back to here. This is, I think, a lot of people may ask the question that a lot of people may ask. At the current stage, UNX token will be issued in the form of WST UNX, what we call the wrap stake UNX, which is a temporary ERC compatible token standard designed to enable early ecosystem participants to engage in network building before the mainnet infrastructure go live and during the security audit period itself. Okay, so so the naming, of the wrap stake, what we call the wrap stake UNX token, okay, is actually follow the industry standard for no wrap stake token, similar to wrap stake ETH. So this is not something that we came up with. A lot of very famous token like Ethereum also use similar things like the wrap stake ETH, okay, pioneered by liquid staking protocol. So to put it in a more simple way, okay, this is wrap stake UNX is like a pre-launch phase of UNX chain, okay, because the chain isn't live yet. Okay, our UniMex chain, the mainnet, isn't live yet. Okay, so the project is using a temporary token to get started, to get the staking started. Okay, think of it as a soft launch, okay, where early supporter can start earning rewards and securing the network before the official opening day. So this is what we call the wrap stake. Okay, so again, what is wrap stake UNX? Okay, so it's an ERC token. Okay, a lot of people say, but I thought we are building on BEP. As I mentioned, because our UNX chain is not up yet. So once it's up, it will be BEP, Binance Smart Chain. Okay, so wrap, okay, wrap, okay, is the ERC, while the our actual chain, UNX blockchain, is being developing. Okay, now stake, okay, ST means stake, so it represents UNX that is already working. Okay, it shows that ST stake, it means that UNX is already working, or let's say circulating. So by holding this, you're essentially pre-staking your token to help build the network security. So this is what we call the wrap stake token itself. Okay. this is what we call the wrap stick token itself. So of course, okay, UNX, this is the name of the final native token. So once the final native token is out, okay, I mean for UNX, that is our native token itself. Okay, so current stage staking launch period. Okay, so this staking launch period is that the UNX network is currently in the staking launch phase, okay, which everybody is doing right now. It's what everybody is doing right now, which can be considered a pre-mining or validator initialization period. So during this phase, early participants receive wrap stake UNX token representing their stake position. Validator infrastructure is being established and validation. The network security threshold is being met before the final launch of the mainnet. Now, okay, so what it means that, okay, it means that UNX, our staking is currently, or our project, our platform is currently in the warm-up phase. Okay, and we are doing these 4 things. Number 1, bootstrap. Okay, number 1, bootstrap security. Okay, so what is bootstrap security? Bootstrap security is we need to ensure there's enough people are doing the staking. Okay, so that when the network flip the switch, okay, it is too expensive for hacker to attack. Okay, so this is very important. This is what we call the bootstrap security. Validator testing. So validator testing means that we are setting up the computer, or what we call the validator, that will run the network to make sure they work correctly. Audit, okay, are double checking the code for bugs. Pre-mining, early participants get to earn their seat at the table before the general public itself. Okay, so this is what this portion is talking about. Okay, this is what we call this portion is talking about. Now, mainnet migration process. Now, what is the mainnet migration process? Okay, in short, is that, once the UNX chain is fully ready and tested, okay, wrap stake UNX will disappear. Okay, it will automatically convert into UNX token. Okay, so this is how, what we call the mainnet migration process. Okay, so the third portion, okay, which is the consensus layer POS and BFT finality. Okay, I think I do not need to go through what word is that. Instead, I will straight away explain to you, what is consensus layer POS and BFT finality itself. Okay, so this point number 3 describe the triple lock, what we call the triple lock security system of the UNX chain. Okay, so to understand it, okay, to easy understanding it, okay, you have to look at UNX not just a typical prioritize permanent verifiable data over everything else. Okay, I hope that you can write it down, the importance of this explanation, because I couldn't show it in words or in plan, because it's all from my mouth. So as I mentioned, okay, point number 3 describe the triple lock security system of the UNX token. Okay, so which means that UNX is not just a blockchain but a financial settlement layer that prioritizes permanent verifiable data over everything else. Okay, so in point number 3, there is 4 core concepts. Okay, number 1, consensus security. Okay, consensus security here. So what does consensus security mean? Prevent double spending, chain reorganization, blah blah blah. What it means that it ensures the plumbing works. Okay, when when what's plumbing, the plumber, they do plumbing work. Okay, this ensures the plumbing works. Okay, So it prevents double spending, which means using the same money twice, and reorganization, okay, and it prevents double gut, okay. So there is three guts. Consensus security is the technical gut. There's three security guts. So consensus security is the technical security guard. Economic security is the money security guard. Okay. So economic security use skin in the game. Okay, what I call it skin in the game, by requiring validator to stake their own token. Okay, the network make it mathematically more expensive to attack the chain than what a hacker could possibly gain. Meaning that, you know, any hacker who want to attack us, okay, it's gonna cost them more than what they can get from us. So it's gonna be, you know, we're gonna make it not worth it to attack our chain as okay. So this ensure the system maintain verifiable asset coverage at all time. Okay, so I think BFT, Byzantine fault tolerance finality, you know, is if you need me to explain to you again, I can do it. So BFT stand for, of course, Byzantine fault tolerance. Okay, in many blockchain like Bitcoin, finality is probabilistic. You can wait 10 to 60 minutes and hope the transaction isn't reversed. So for UNX, okay, we use, you know, BFT for deterministic finality. So as long as, you know, a block, we use the 2/3 rule. What do I mean by the 2/3 rule? Okay, so a block is only official when validator holds more than 66% of the total network wealth agree it is valid. Okay, so one is valid, guys, it is irreversible. Okay, so which means the block is, so this provide the instant settlement field required by professional financial institution. Okay, so this is what we call the BFT. Okay, BFT is the permanent, what I call is the permanent switch. Okay, it's the permanent switch. So one is done, you cannot be reserved. So all in all, right, okay, for this, you know, for this part, all in all, what it means is that, okay, UNX chain is built for high stake finance, and we use, you know, we use BFT finality to ensure that once a transaction or a solvency check is recorded, it is set in stone forever, guys, forever, making it impossible for the system to lie about how much money it actually has. Okay, so this is the bottom line of this part itself. So why does UNX change require BFT finality? Okay, so I know a lot of people may not understand all this, so let me just, you know, explain in simple word itself. Okay, so why UNX change require BFT finality? I don't know whether should I flip the camera back or, you know, but, you know, I need to, but I wanted to let y'all know at which part am I talking about so that you're not confused. Okay, so why we use BFT finality? Because, okay, this is a economic and technical fail-safe that make UNX chain more like a high security financial institution rather than a typical speculative blockchain. Okay, so we want, okay, we use it because we are a high security financial, I won't say we are, but we want to, you know, we want to make it more like a high security financial institution and not some token that you. So the breakdown on why this specific composite architecture is necessary, okay, is because, okay, number one, it consists, you know, it consists of a composite model. UNX chain doesn't just use one method to secure the network. It combines three. Second one, dynamic inflation. And third one, trust and constraint layer. Now, proof of stake, I believe everybody know. Okay, so proof of stake basically is the basic security layer where validator lock up token to earn the right to process transaction. Okay, but what is dynamic inflation? Okay, unlike Bitcoin, okay, dynamic inflation. What is dynamic inflation? Unlike Bitcoin, Bitcoin has a fixed supply. Okay, UNX adjusts its supply, or adjust its supply based on security budget. If the network need more security, we will need more token to pay validator. If it's over secured, if it's too secure, we will slow down. All right. Okay. So this is what I call dynamic inflation itself. Okay. Of course, the third one, trust and constraint layer, PO, proof of reserve and proof of liability. So this is the accounting layer. Okay, this is the accounting layer itself. Okay, where R is the verifiable, verifiable reserve, and L is the verifiable liability. So reserve means the asset that we hold, and liability is the money that we owe. So the goal is that the blockchain is hard coded to ensure that the reserve is always more than the liability. Okay, the reserve is always more than the liability itself. Okay. Now, second part, this part, let me just put here. All right. So you can understand where I am now. So the architecture also introduced three category on-chain action that must be irreversible. Staking and slashing. Okay, so what is staking and slashing? If a validator cheat, the network slashes their money. If a rollback occur, a cheater could technically undo their punishment itself. Okay, so this is staking and slashing. Inflammatory minting, which means security budget issuance. Okay, so what is inflationary minting? This is how the security cards are paid. Okay, this is how we pay the security guard. Okay, if the network undid the creation of this token, okay, the guard will not be paid. Okay, the security guard will not be paid. Okay, and they will stop protecting the network itself. Okay, of course, verification. Okay, verification of asset and liability state. Okay, so what does it mean? This is the most critical part. Okay, if the blockchain verified that a bank is solvent at 10 a.m., but a network glitch rolled that back at 10:05, okay, the trust of the financial data is destroyed. Okay, so this is very critical itself. So without deterministic finality, right? Okay, without deterministic finality, guys, any rollback of this action will undermine both economic and solvency guarantee. So this is what it's all about. Okay, so now 3.2 validator mechanism. So what is validator mechanism, guys? So validator mechanism, okay, validator obtain block production and voting right by staking UNX token. So for those people who stake UNX token, you are the validator. Okay, you are the validator. Okay, but listen carefully. Staking UNX, not staking WST UNX. All right. Okay. So voting power is proportion to the amount of UNX token stake. So the more UNX token you stake, the more voting power you get. Okay, same thing, a block is final, okay, when 2/3 of the validator, finalize the consensus. So this is the validator mechanism itself. Now slashing mechanism. So what is slashing mechanism? Now this is very important. Okay, if you don't understand this graph, right, okay, let me just explain to you in words. Okay, so this section, okay, outline the disciplinary rule for validator on the UNX chain. Is my translation gone? How come my translation is gone? Testing, 1, 2, 3. Oh my god. My translation is gone. Anyway, let's continue. If you can get, if you can record it down, then do it. Okay. Okay. I do not understand why my translation is gone. Okay, I didn't do anything to it. Okay, anyway, the section, okay, slashing mechanism, okay, what does this section mean? Okay, it outlines the disciplinary rule for validator on the UNX chain. Okay, in the proof of stake system, right, slashing is the act of burning or taking away a portion of the validator lock token to punish them for breaking the rule. Okay, so if you break the rule, okay, if let's say you stake 1000 UNX token, you break the rule, we can punish you by removing the token, the lock token. Okay, so guys, do not break the rule. Think of this like as a three level of legal trouble, a validator can get into. Okay, so the major crime, double signing, or avocation, double signing avocation, 5 to 10% of their stake is permanently taken away. Okay, so if you do bad thing like double signing or equivocation will take away 5 to 10% of your staking amount. Okay, so for prolonged downtime, we will take away how many? 0.1 to 1%, okay, of your staking amount. Okay, of course, right? Okay, of course, the death penalty, okay, the death penalty is, malicious behavior. Okay, malicious behavior. This is the most severe tier. It involves deliberate attempt to hack the system, reorganize the chain history, or conclude with others to steal fund. This is what I call malicious behavior. Okay, because this kind of action will threaten the entire ecosystem survival. Okay, so the penalty is we will take away all your staking UNX, or your UNX token that has been staked. So guys, slashing mechanism is the punishment for people who break the rule. Okay, the most severe one is if you try to hack our system, or you try to rewrite the chain history, or you try to steal the fund, we will take away all your staking amount. So it's a pretty simple logic. You break the rule, you do illegal things, we punish you. So don't be so, oh, you think when you read this, permanent removal of my staking amount. No, this is only happen if you do something stupid or something illegal, something that will jeopardize the survival of the chain itself. All right, so guys, for this part, don't be so scared when you see this this part itself. This is only happen when this only happen when you break the rule. Let me just let them know that my translation is gone. All right. Now, point number 4. We are almost there, guys. Halfway there. Okay. What is governance framework, guys? What is governance framework? Okay. So, I will not read all these things. You can read on yourself. It's already out in the public. But let me just explain to you what is governance framework itself. So governance framework, outline what we call, in USA there has the constitution. Okay, this is like a constitution and the decision making process for the UNX chain. Okay, it describes a system on chain. It describes a system of on-chain governance where the rules of the network are managed by the community through the blockchain itself, rather than by a central company. So, okay, so as you can see, this is not, okay, so is the whole UNX chain is managed by the community, not by UniMex, not by UniLive, not by me, not by the CEO or whoever. Okay, it is by the community through the blockchain. Okay, so what is on-chain governance? Okay, so what is on-chain government itself? Okay, so like a traditional company, guys, a CEO or board make decision. In UNX, decisions are made via voting. It's made through voting itself. Okay, it's made through voting itself. So proposal, okay, stakeholder can propose change like technical upgrade or adjusting fee. Voting, okay, token holder vote on this proposal directly on the blockchain itself. Okay, and execution, okay, execution. Okay, execution. If a vote passed, the change is implemented automatically by the code itself. Okay. So this is what it talk about. So the core objective, okay, the core objective, okay, now here, the core objective here. The core objective of the government's framework, okay, is to ensure the predictability of the protocol rule. What do I mean by that? The rule aren't supposed to change on, just like that, on a snap of a finger. Okay, the governance process ensures that everyone know exactly how and when update will happen. So everybody can predict when the update will happen. Okay, and also to prevent the control of the network by one single entity. Okay, this is what I call anti-monopoly. Okay, the system UNX system is designed to prevent one person or one large whale, okay, from taking over. Okay, this is usually achieved by spreading voting power across many different participants. Coordinated decentralization. Okay, so it provides a way for the community to talk to each other and agree on the direction without needing a central headquarter or a boss. So this is what I call providing necessary coordination while preserving decentralization. Okay, so this is what this government's, this part is talking about. Now let's take a look at the governance participant. Who are the people that can govern? Okay, so now governance participant basically means that the democratic structure of the UNX chain. Okay, it defines who is allowed to sit at the table, for example, and make decision, ensuring that power is shared among the community rather than by one group of people. So we have validator, we have delegator, and we have proposer. Okay, so what does validator do? Okay, validator are the professional participants who run the 24/7, okay, 24 hours a day, 7 days a week. Okay, so that is their role. So what kind of power do they have? Okay, they have the direct voting right on all the proposal. And the requirement to become a validator, okay, you must take large amount of UNX token as a collateral. Their voting power is determined by how many UNX token, okay, they have staked. So this is validator. Now delegator, okay, delegator. What is delegator role, power, and benefits? Okay, delegator role, okay, this is for the average token holder who want to participate in governance but doesn't want to run a server. These are the delegator. Okay, so their power is you lend your voting power to a validator of your choice. Okay, you can lend your voting power to the validator. So the benefit, Okay, by delegating, you help your chosen validator to have a bigger voice in the network, and in returns, you typically earn a share of the staking reward they generate. Okay, you still keep full ownership of your token itself. Okay, so this is delegated. You delegate your voting power to the validator itself. Of course, the last one, proposer. What is their role? Okay, any user that want to change a rule or upgrade the system, that is the proposer. So what is the requirement to become a proposer? To prevent the system from being spammed with thousands of silly ideas, and you must hold a minimum amount of UNX token to submit a formal proposal itself. Okay, so once the proposal is submitted, okay, it moves to a voting phase where validator and delegator decided, okay, whether the proposal approved or not. Okay, so this is the government participants. Okay, so for proposal type, what are the proposal can be proposed? Okay, so basically there are 4 types of proposal. Okay, 4 types of upgrade. Okay, what we call upgrade that can happen in UNX chain, and the specific process required to make them official. So in a decentralized network, guys, okay, you can't just change the code overnight. You have to follow a strict legal, like a legal process on the blockchain itself. Okay, so these are the following types of governance proposal. Like the first one, protocol parameter adjustment. Okay, example like inflation bound, staking threshold, blah 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 blah. Okay, so it's just like a city adjusting the speed limit on the highway based on the traffic flow. So this is what we call the protocol parameter adjustment. The second is the security parameter upgrade. Okay, or the enforcement, what we call the enforcement. Okay, now this changes the focus on keeping the network honest and punishing the bad people itself. Okay, so now system upgrade and hard fork. Okay, system upgrade and hard fork proposal is what we call. Okay, this is another, for another type of proposal you can do. So major structure change to the blockchain. So system upgrade and hard fork proposal are what we call the major structure change to the blockchain itself. Okay, now what does hard fork mean? Hard fork is when the network needs a massive software update that isn't compatible with the old version. Then we need a hard fork. New feature. Okay, new feature. Okay, new feature. Okay, adding completely new capabilities such as support for a new type of financial asset or a faster way of processing data. Okay, so for example of system upgrade and hard fork processor, for example, is like tearing down an old bridge to build a newer, wider one that can handle more weight. Okay, of course, the last one is the emergency security proposal. Okay, so just like a building, okay, a fire alarm system that can be triggered and immediately locked down to save life. So these are the 4 proposal type. Now UNX chain support. Okay, so of course, voting and approval threshold. I'm here. Bear with me, guys. I know it's very dry. Or the emergency, or what we call the emergency governments. Now, point number 5. Almost there, guys. Almost there. Okay, so point number 5. Now, security budget and inflation. This is one of the most important point. So from this part onward, it's very important, okay, for you to listen carefully. The translation is up again. The AI translation is up again, so that you can, jot it down, write it down, or even take a screenshot, post or video itself. Now, security budget and inflation, blah 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 blah. So this is, okay, all this, all these things. Okay, so all these things, what does that mean? Okay, UNX chain reject a fixed supply model in favor of a security budget driven issuance. Okay, which means we don't adopt a fixed supply model itself. Okay, instead of a hard cap, the network dynamically adjusts token creation based on real-time security needs. Okay, based on real-time security needs. Issuance is higher to quickly recruit validator and secure the chain. As it matured, it enter algorithmically control inflation. Here's the issuance rate shift based on the bonded ratio, which is the percentage of token stake. The goal is to ensure the security budget, or what we call the rewards, is always high enough inflationary pressure into a direct incentive for long-term network stability and protection. Okay, so this is what the security and budget inflation means. So for the bootstrap phases, okay, now bootstrap phases, okay, which is what we call the startup period, okay, the initial period, okay, think of this as an initial, okay, bootstrap phases, you think of it as an initial recruitment drive, okay, high reward, okay, the network start with a high inflation rate of up to 24%, okay, up to 24%, okay, so okay, the goal, why we do that, because we want to quickly attract a large number of validator. So by offering high rewards, the network ensure it is too expensive for anyone to attack the chain from day one. Okay, so this is what the bootstrap phase means. So once there is enough validator, okay, and the network is safe, the high rate, okay, this kind of high inflation rate will end. Okay, so once the bootstrap phase end, we will enter into the steady state. So once the network is stable, okay, okay, it shifts to a more sustainable model where the annual inflation drop to a range of 3 to 8%. Okay, drop to a 3 to 8%. So unlike Bitcoin, which has a fixed halving schedule, right? UNX inflation is dynamic one. Okay, guys. So if the network need more security, the rate increase slightly. If it's over secured, the rate will decrease, the inflation rate will decrease. So it responds to the actual need of the blockchain itself. Okay, so it will respond to the actual need of the blockchain. Okay, so validator economic. Okay, so what is validator economic? Okay, this is the job, and you get a job and you get a pay. Okay, so this explains what validator do and how they are compensated for their work. So what is the role of the validator? Okay, the responsibility, block production, the state validator, and governance. Okay, so these are the responsibility for the validator. So in returns, okay, their rewards, okay, in returns their reward is the validator allocate their reward is derived from the validator allocation of the protocol inflation and the network transaction fee, if applicable. Meaning that the validator income come from two places. Okay, new token and transaction fee. They are slice of the annual 3 to 8% inflation and a portion of the fee that user pay to send money or use the app, okay, if applicable itself. So bottom line, UNX use high rewards to build a fortress of security, then scale back to a stable rate that prints only what is necessary to keep the network guard on duty itself. So that is the validator economy. So guys, I believe this is the part where, you know, algorithmic inflation, this is the part where a lot of people pulling their hair or scratching their hair, you know, or trying to skip it and not to read at it. Trust me, I have the same feeling as well when I saw this thing. All right, but you know, if you put it into layman term, what is algorithmic inflation? Wow, the translation can catch my pronounce. Okay, so algorithmic inflation, okay, it means that, you know, this part, okay, algorithmic inflation is the brain of the UNX ecosystem. Okay, it is a mathematical formula that automatically manage the token supply. So unlike traditional currencies where central banks, okay, decide inflation, where central bank decide the inflation itself, right? UNX use network is always secure and solvent. Okay, so the core variable definition, this is the part I believe a lot of people just couldn't bother to read. The B, which is the current bonded ratio, which is the staking balance, the B star is a targeted bonded ratio. Okay, it's the ideal level of the staking. The network need to be unhackable. Okay, so B, the current bonded ratio is, the staking balance. Okay, what is current bonded ratio, which is the percentage of all UNX that is currently staked. Okay, B star, what does that mean? Okay, target bonded ratio. This is the ideal level. The ideal level of staking the network need to be unhackable. This is the target bonded ratio. Okay, the ideal level of staking the network need to be unhackable. H, tell the network if it has enough asset to cover the debt. I, okay, so I, the current inflation rate. Okay, the current inflation rate, the percentage of 8% itself. Okay, the health score. So K and K adjustment coefficient. So what is K and K? So the adjustment coefficient, which is the mathematical constant that determine how aggressively the system react when this part and H move away from their target itself, which is the B plus and H. Okay, so try to get as much as possible, guys. Okay, I know it's a lot, it's very dry. Okay, I know it's a lot, it's very dry. So let me just repeat again. What is B? The current bonded ratio, which is the percentage of all the UNX that is currently staked, which is the UNX token that's been currently staked. That is B. B star, okay, which is the ideal level of staking the network, okay, need to be unhackable. H means the health, okay. H is the health score, okay, the system solvency ratio. So what does that mean? H will tell the system, okay, the network, if it has enough asset, enough money to cover the debt. Okay, of course. Okay, I minimum of 3% to 8% itself. Okay, and K, okay, and K1 and K2 itself is the adjustment coefficient. If B star and H move away from their target, we will adjust the coefficient, okay, to manage the inflation. All right, guys. Okay, I believe I try to be as simple as possible already. So, guys, please bear with me. Okay, I'm also having a very tough time. Okay, let me just drink some water. All right, the definition of system solvency. Now, the solvency formula, as you can see from here, H equal to RH, RLH equal to slash divide fraction bracket R bracket L H equal LR. Oh, okay. What all this mean? Okay, this formula is the self-auditing mechanism that ensure the platform financial integrity. Okay, so please write it down. Okay, I repeat again, please write it down. This formula is the financial integrity. Thus, this algorithm works. Okay, so okay, let's go back. Okay, where R represent the variable reserve and L represent the variable asset. Okay, so the inflation rate, okay, the inflation rate is updated algorithmically according to the itself, right? Okay, going from the blah 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 blah. Okay, so if you don't understand what this formula do, it's okay. Nobody understand. What I heard, from people, legends say Mr. Jackie actually go to US, dig up Albert Einstein body, and then get the soul out and ask him to write the formula out itself. You know. Okay, if you don't understand the formula, it's okay. Basically, this formula is the engine of the UNX monetary policy. Okay, it is a PID style controller. Okay, what is PID style? Proportional integral directive. Okay, that automatically adjusts the inflation rate to keep the network secure and financially healthy. Okay, let me repeat again. If you cannot follow that translation, okay, please write it down. I will try to speak it as slow as possible. This formula you see, this one, blah blah blah, all these things, the Albert Einstein formula, guys. Okay, the Albert Einstein formula. What does this formula do? This formula is the engine of the UNX monetary policy. Okay, it is a PID style controller. PID stands for proportional integrity to keep the network secure and financially healthy. Okay, so this equation also determine the new inflation. This equation also determine the new inflation by looking at the current inflation and adding two corrective shows, okay, based on the network performance. So what are the two corrective shows am I talking about? Okay, what are the two corrective shows am I talking about? This is the K1, the K1B, all these things. This is the adjustment coefficient. So this part ensure the network is unhackable by hitting a target stake amount. Okay, by hitting the target stake amount. You see this one, B up arrow star B, So this security, okay, this is the part where, the ideal percentage of the net, the part that ensure the network is unhackable, okay, by hitting the target stake amount. Okay, so all these, all these are the are the meaning of all this logo itself. So guys, you don't have to know what all this means. All you need to know that this formula, okay, this formula is the engine of the UNX monetary policy, okay, and it will automatically adjust the inflation rate to keep the network secure and financially healthy, okay, and this formula also determine the new inflation by looking at the current inflation by adding the two corrective shows, okay, based on the network performance. Okay. B up arrow star B and the B, okay, another B, and this B, the current ratio. This one, the second one, and the third one. So if the second one is lower than the third one itself, okay, which is the current stated, that the current stake UNX token is lower than the target UNX, token being staked, okay, the result is positive and the inflation rate increase. So higher inflation means higher reward, which will attract more people to come to stake. Okay, so this is the, let me just stretch my back. So this is the what the formula is all about, guys. So don't fret over the formula and you don't understand how all this thing works itself. Okay, so don't be, there's nothing to be, there's nothing to be headache about. Okay, just to let you know, okay, what is this formula is all about. That's all. Okay, so of course, okay, the supply projection table, 10-year terminal supply itself. So UNX, okay, this is very direct. Okay, UNX adopt the following combined architecture: POS as the consensus foundation, proof of reserve and proof of liability as the solvency constraint layer itself, and dynamic inflation. So this is the tokenomics. Okay, so this is the tokenomics. This is also very straightforward. So guys, okay, no need to be, I don't need to go through so detailed about this. This is very straightforward itself. So read it, you can understand it. Okay, not a problem. Okay, but this one, okay, will be a problem. Okay, this part, 60% of the initial total supply will be gradually released to the market through a protocol level inflation mechanism in the future itself. Okay, so UNX, what are the inflation? So right now, inflation rate, okay, in year one, it's going to be 744 million. Year 2, 877, 1 billion, 1.1, 1.18, 1.284, 1.386. All the way to year 10 is 1.7. The maximum we will go based on 8% inflation itself. Okay, in year 10. So in a way, yes, we do have a fixed supply. Okay, this inflation is based on 3% inflation. So as you can see, 3%, 6%, 8%. So if it's a 3% inflation, okay, the maximum supply will go up to 1.37 billion or 1.378 billion. If it's 8% inflation every year, it will be 1.74 billion. So maximum, the total supply will be 1.747 billion itself. Okay, so this is also very straightforward. Okay, so this is very straightforward. So now, as I mentioned just now, this formula will this formula, how you derive all these figure is actually based on this formula, guys, the inflation adjustment formula. Okay, so in short, okay, this formula remove human error. Okay, it creates a self-correcting currency that mint or print more when the network is weak and print less when the network is strong and safe. Okay, so when the network is not strong, we will mint more we will mint more token to attract more validator to stake. Okay, more people to stake their token to become validator. If the network is strong, very stable, okay, we do not need to have so many token. All right, so this is what this formula is all about. I know a lot of people give up when they saw all this formula. Okay, but it's not that complicated. Okay, guys, it's not very complicated. Okay, so this is just a way UNX, how the how UNX monetary policy is. All right, so 6.5. Okay, where 6.5, the linkage and quantitative summary. Okay, so what is this section, okay, so this is the part where the executive summary of the whole entire UNX economic model. Okay, so it connect the technical, we have the consensus layer, okay, which what we use the proof of stake and the BFT finality to ensure the network is fast and the history can never be rewritten. Secondly, the security budget layer. This layer use incentive or inflation to pay our validator or our security guard. So it adjusts automatically to make sure that there is enough money to keep the network safe. Okay. Third, trust and constraint layer, okay, which is the proof of reserve and proof of liability. Okay, now this layer force the inflation to stay between 3 to 8% and act as a financial audit to ensure the system is always solvent. Okay, the system is always solvent itself. So penalty and incentive mechanism. Okay, we have slashing, we have inflation weighting, and permission constraint. Okay, so what is slashing? Okay, the punishment, as I mentioned, if you do something illegal, we punish you. This is called slashing. Inflation weighting, we give by giving more or less reward depending on the network health. Okay, and permission constraint. What is permission constraint? The rule that limit who can act as a validator based on their behavior and the amount of UNX stake. So after 10 years, the total supply is expected to most likely fall within the range of 1.4 to 1.7 billion UNX token. So under the neutral scenario, the total supply is approximately 1.6 billion, 1.6 billion token itself. So in summary, guys, okay, for the whole thing itself is predictability. Okay, by showing that even the worst case scenario, maximum inflation, it only leads to 1.7 billion token. So UNX is proving to investor or anybody who want to invest that the currency will not hyperinflate. If you still remember Luna, okay, it will not be hyperinflate. It is a constraint system where the math dictate the supply, not the foundation, not a team, not me, not Mr. Jackie, not Mr. Harris, not anyone. It is the math that dictate the supply of UNX token. Alright, second last most important part, guys. Okay, the 3-layer burn mechanism. Okay, so this mechanism, okay, describe deflationary counterbalance of the UNX chain. Okay, so we have inflation. Now the burning will deflate the UNX token, while the inflation formula add new token, as mentioned. Okay, sorry, I'm just burnt. Okay, so we have inflation formula that add new token to pay for the validator. Now these three layers of burning remove the token from the supply to increase scarcity and the value of the token itself. So this is ensure that the network become more successful and healthy, and the printing or the minting of the token is offset by destroying them. So what are the three ways of burn mechanism? The first way, the health burn, the healthy bonus burn, or what we call the H trigger burn, or what we call the healthy base burn. Okay, so how does it trigger? Okay, this happen when the system reserve or the asset are much higher than the liability. Okay, or in simple that we have no place to put our money already. The bank is full. The safety bank is full of money already. So instead of letting the excess money to sit there, okay, we will use the excess money to take a portion of the newly mint token and permanently destroy them. Okay, which means that if we have too much money, we will take some of the money to go and buy back the token and burn it. Okay, so this is what we call the healthy burn. Okay, why is it called the healthy burn? Because we have too much money, so we use the money, buy the token back and burn
They
it.
can finish this.
The second type of burning is the eco burn. Okay, usage burn mechanism. Okay, now eco burns. Okay, meaning what is eco burn? Okay, very simple. I think this is also very straightforward. 25% of the fee from the UniMex exchange are burned. Okay, funding 25% of the interest paid by the trader and the perpetual contract is used to buy back UNX from the market and burn. Okay, launch pool, 5% of launch service will be burned. Gas revenue of the infra, okay, will be burned as well. So this is very straightforward. I think you can understand by reading this. I do not need to go over it. Okay, now the third way of burning, government's level burn. Okay, now this is a manual control special circumstances. Okay, I want to emphasize a bit of this burning. This is a very special circumstances. Okay, so government, okay, who can burn? Okay, treasury burn. Okay, treasury. Okay, or what causes treasury balance subject to government votings? Okay, so the community can vote to burn a portion of the saving account, what we call the treasury. Okay, if they feel that there is too much supply in the market. Okay, so this is what we call the treasury balance. Okay, or the treasury burn. Okay, and AML slashing access. When bad people are caught and their token are being punished, for example, just now I mentioned that if we caught you doing illegal things in our chain, okay, we will take away a portion of your stake UNX token that is being staked, correct? Now this portion will also be burned itself. The punishment, the token that we punish you at will be burned. It will not be collected back to us. Okay, so in short, okay, for burning mechanism, the three burning three layer burn mechanism itself. In short, okay, the burn mechanism ensure that scarcity equal to success. The more the network is used, the healthier its reserves are, and the faster the total supply is reduced, fighting against the inflation itself. Okay, so this is the bottom line. So we all know that burning, burning is one way of making the price of the token increase itself. Of course, okay, the last one, staking pool. Okay, staking reward and incentive policy. Okay, reward schedule. Okay, staking reward follow a deterministic step-down schedule with all tier reduced 30% every 6 months. I think I don't need to emphasize much on this portion. very easy to understand. Every 6 months, we reduce the staking reward by 30%. Now, this structure provides strong early stage incentive while ensuring convergence towards a sustainable long-term reward model. Okay, so for people keep saying that if you want to work on the reward model that can last 3 years, 5 years, 6 years, a step down on on the staking reward is is a must. Okay, a step down model. This is what we call the step down model. Okay, so 8.2 reward source and distribution. Okay, so where does the money came from? Okay, reward source and distribution. Okay, incentive. Okay, it came from incentive budget. Okay, a set amount of tokens set aside at the launch. Okay, part of the 1 billion supply itself, and then revenue sharing, a portion of the protocol earning. Okay, and a portion of the protocol earning itself. Okay, so no you guarantee is what we call the compliance friendly language to protect the protocol legally. Okay. Okay, so no you guarantee. The protocol explicit state that staking is not a high interest saving account. Okay, this is not a high interest saving account. Okay, and also if the network has too many validator, the budget run low, the reward can be lower or even pause. Okay, and the network always prioritize its own survival and security over paying out high interest to staker, okay, or to people who stake. Okay, no, so this is what we call the no you guarantee. Okay, no you guarantee itself. So if you don't understand this part itself, also very important. Okay, this is a compliance friendly language to protect the protocol legally itself. Okay, number one. Okay, I repeat again. Number one, the protocol explicitly stated that the staking is not a high interest saving account. This is not a saving account. All right, guys. Okay, so if the network has too many validator, the budget will run low, the reward can be lower or even pause. Okay, so the network will always prioritize its own survival, okay, rather than paying out the the rewards to the people who stake. Okay, so risk and adjustment clause. Okay, risk and adjustment clause. Okay, this gives the protocol, okay, the power to change the rule in real time. If number one, if the system solvency is low, the protocol might slash staking reward to save money. Okay, this is number one. And number two, if the bonded ratio is too low, it might ignore the step down and increase the reward to attract more security itself. Okay, so this is what we call the risk and adjustment clause. Of course, compliant-friendly disclosure, staking participant does not represent a guaranteed investment return. Okay, guaranteed investment return. The protocol prioritizes network security and considers the over reward level. The event of budget constraint ever. So this is just how I say, okay, we will prioritize the survival of the network rather than paying out the staking reward to people itself. So this is to ensure, yes, every 6 months, this is to ensure, okay, that, okay, this is to ensure that the survival of the network itself. We want to make sure that it go long term. All right. Point number 9, 10, 11, 12, 13 is all very straightforward. Okay, 3-year formula curve data. Okay, so from here you can see last time, last month is 25, 12, 15, 19, 25. Right now, from now until I believe is until July. Yeah, I think probably July. Yeah, probably the start of July, 5th or 6th of June. I can't remember. I think it's July. Okay, it will be from now until July. It will be 8.4, 10.5, 13.3, 17.5. After which 5.8, 7.3, all the way until here, 2.0, 2.5, 3.2, and 4.2. This will be very much, the same as what most of the big exchange is offering already. All right, guys. So this is our goal, is to make sure that in the next 3 years, okay, our staking reward is the same as, you know, what other major exchange is giving out. So also this is a comparison with other, you know, major blockchain itself. You know, we have UNX compared to Ethereum, Cosmos, and Solana. Okay, so you can read on your own, you know, chain type layer 1 public blockchain, you know, app chain, and this like that. Consensus, okay, we have proof of stake plus BFT finality. You know, some other people have other things itself, you know. So this is the comparison. You can take a look. No need to, you know, no need to, it's very easy to understand. Of course, point number 11 is our 12 to 24 month technical roadmap. Okay, this one you also can, you know, read it. Very easy to understand. This is what we're going to do in the next 12 to 24 months itself. Now, point number 12 and point number 13 is a non-security disclaimer. Okay, what is non-security disclaimer, guys? Non-security disclaimer is let you know that UNX is not a security. Okay, it's a utility token to facilitate protocol level function within the UNX network. Okay, so including but not limited to staking participation, network security, governance, coordination, and protocol operation. UNX is not offered or sold as a security or investment product. Nothing in this document constitutes an offer of security, investment advice, or solicitation for investment. Any protocol incentive or reward are utility-based, budget constrained, and subject to protocol defined rule. Okay, so this is a non-security thing. Basically, just to let you know that UNX token is not a security or stock or bond or financial product. Okay, and jurisdiction disclaimer, very easy to understand. You know, if your place is not allowed to do staking or cryptocurrency and you still want to do it, is on your own action. Okay, so this is the jurisdiction disclaimer. All right, guys. So with this, I have, and my hair is also messy right now. With this, you know, I finished explaining the, you know, the white paper itself. And by going through that, I actually get to know more about what is the white paper is talking about. So guys, so this is the white paper. This is the first white paper we ever published. If you were to ask me, it is very important, important milestone for us. Why? Number one, yes, a lot of things inside the white paper we haven't fulfilled, because to do up a chain is not so easy and it's not so fast. Everything takes time to realize. But for those people who have been with us for more than a year, everything that we said out to do, we fulfill. Okay, yes, we may not hit the timeline that we always wanted to hit, but we always fulfill. We always manage to we always get it done. Okay, we always get it done. So it takes time, you know, to make all these things to be the actual chain itself. It takes time. No, back in 2024, 2 years back, you know, the first group of people like Mr. Michael, Mr. Jason, Mr. Heng, Emo, you know, this group of people, when they first trust us, we have nothing to show until we have a lot of things to show. I think the white paper is a guide, okay, not only for you guys, but also for us, to take a look, where are we right now, what are the things we need to do, what are the time frame we need to hit. So in the next, you know, the whole UNX change could take 12 months, you know, or 18 months to be complete. but we will get it done. We will definitely get it done. I never, back on my, wherever things that we say we set out to do, we will get it done. So, guys, have a bit of patience with us. I'm not asking, all these things. White paper is a very important, milestone for us, because if you have done other projects, you probably have read a lot of different type of white paper, and all these other project or even platform, right, they really don't mean it when they wrote this white paper. Why don't we publish the white paper last year, June, when we first launched UNX token? Why don't we publish the white paper in last year, August, when we launched our, mini app UniMex itself? Why don't we do that? Because everyone in UniLive and UniMex took white serious very, very seriously. It is not something I wrote down there and I go, and it's not something that you can anyhow write. White paper is something that is very, very sacred. It's very sacred to the extent that, people misuse white paper. Okay. But to us, white paper is a very, when we issue this white paper, we mean to fulfill every single thing that we set out to do inside the white paper. So that's why I really don't understand how other platform and other, or scam company, how they tarnish, destroy the reputation of white paper. Because after so many scam company outside, white paper, the scam company also issue white paper. I think everyone need to go back and read the very first white paper that ever published back in 2008, which is the Bitcoin white paper that changed the whole world. That is how we took white paper internally, how we feel about white paper. So when we after 6 months of, penning down, we finally launched this white paper. I know it's already been tarnished by a lot of scam, a lot of platform, a lot of project, but we still want to take this white paper very seriously. So guys, to us, this white paper is everything. To me, this white paper is the whole universe. And I want to put it out there that, I know a lot of people have seen many different type of white paper, but rest assured, the white paper that I explained just now, we really, really put in a lot of effort to pen it down, to work out the logic, okay, and we really put in a lot of effort to pen it down, to work out the logic behind the whole thing itself. We really took in the effort. Mr. Jackie had put in a lot of effort. Mr. Harris, especially Mr. Jackie, Mr. Harris had put in a lot of effort. We even have training on the white paper. Which platform give training on white paper? Come on. They just use PowerPoint slide and just, draw picture that isn't there. So guys, UNX, UniMex, we are a group of people that go back to basic. We go back to white paper, and we treat white paper as the sacred, like the 10th commandment or the 10th amendment. How seriously we took white paper is. So guys, anything you're not sure regarding the white paper, please go to your leader. And anything you're not sure, if the leader not sure, the leader can reflect it back to me, and I try to answer as much as possible. All right, guys. So please took this white paper seriously. Is nothing special. This white paper has nothing special, but I dare to say that we really put in the effort and the time to wrote it down, this white paper. It is a combination of a lot of people effort itself, you know, from CC to Mr. Jackie to Mr. Harris, myself, other people. You know, we really put in a lot of effort to do this white paper. Okay, a lot of people may think that it's just a white paper. Why like that? Because we took white papers very seriously. Okay, because just like the first white paper that ever published, the Bitcoin one that changed the world, we also hope that our white paper can change the world the second time. So guys, thank you for so much time for listening me explaining the white paper itself. Second thing, we already dropped, as mentioned in the white paper just now, we already dropped the staking reward to 17.5%, for the 360 days. This according to the white paper as well, to ensure that, the whole project, the whole platform, to go long term, to go long term itself. Secondly, for people who are going to the Thailand New Year party, I will see you there. We're gonna have a great time together. We're gonna have a wonderful, and we're gonna start the year right. All right, guys. Thank you so much for your time. Thank you for having me here. Thank you for listening to me for the past 1.5 hours. I'll see you around, guys. All right. Thank you so much, guys. Thank you so much. Okay, see you. Bye.